Varun Sabu too joins in on the show to talk about what he's making of the market so far. Varun, I was just chatting with Sandeep Sabharwal, who joined us just a short while back, as to how now towards the fag end of the year and perhaps the start of the new year as well, volumes, queues, all of it is going to dry up, and then will come the January earnings followed by budget, etc. What do you think the market construct is going to be? Will this kind of volatility persist, or do you think it's going to become more lackluster with the drying up of volumes?
Yeah, hi, thanks, Edie, now for calling us on your show again. There are two, three things which you're talking about. One is about how the flows in December should have been and how they are. Honestly, it's about 19th December. And if we see, I haven't seen volumes as such drying up. There's a very different phenomena versus other years that we have seen. During this time, post the second week, you generally see volumes drying up, but that has not happened yet. So it's a very different trend from that perspective. Secondly, will the volatility continue? In a scenario where global inflation is bothering, say, the US and the West, and in a scenario where in India earnings have been a little shaky for the last quarter and visibility not being that great in the near term also, it's going to be quite a mixed bag of whatever we can understand from whatever we are doing our research on. But I still think that the correction part has happened and the severity has been quite large. There's been good correction. There's been good correction in multiples overall. If we see Nifty today is at a multiple of about 18 and a half times 1 year forward, which is quite a decent level. I don't see any reason why your index should trade anything below 18 times in general. I don't see those times coming back where we go down to 15 times earnings, right? Because whatever said and done, our growth rates are much better than any country in the world. So that premium, that multiple to peg will remain. And I see Nifty still remaining firm. What is going to be interesting is seeing how the earnings season pans out, this one and the next one. I'm quite hopeful that things should start improving from the next quarter, surely. This quarter will be an interesting one to see how this pans out. So that will drive, in my view, how markets should shape up going forward.
Right. Good afternoon, Varun. Cheryl also joining the conversation. And like you said, that we need to wait and watch and see how the earnings pan out actually for the companies, because Q2 wasn't that good. And talking about Q2 not being good, FMCG sector where everyone was betting on, that one did not perform in the quarter gone by. And while the commentary from most of the participants are of the view that in the next 2 to 3 quarters, things will start stabilizing for FMCG space. Are you also in that sort of a camp who believes that things will start stabilizing for the FMCG space? So therefore, one should not put this in the avoid list for the year 2025?
FMCG has been one space where honestly everyone has gone wrong, including myself, for the last 6 years, right? We have been all trying to time that rural recovery will happen. And the moment it started happening, we suddenly heard that urban slowdown is happening, and that is impacting FMCG stocks. See, we need to keep in mind there are two things which have happened. One, the growth rates in FMCG are not going to be anywhere super normal. They're going to be in that 10-12% kind of earnings growth range. That's not going to change too much in the years to come. Their strength used to be the distribution model, which they used to have. The reach of, say, a Hindustan Unilever was the strength which they used to run with, right? In the yesteryears, which I'm talking about. But what has changed now with e-com and the way we are seeing Blinkits and Swig and Instamart, etc., becoming more and more prominent, this arbitrage which they had, the advantage which they had over others is gone. So, and these are extremely well penetrated categories. So it's not that the category is going to grow and everyone benefits out of it. Plus, we are seeing a lot of small competition coming here and there across their SKUs which are there. So, in my view, FMCG is not a space to be in. This definitely should be an avoid in anyone's portfolio. I don't see this changing till the time multiples don't come down to say a 25x PE on a 1 year, 2 year forward. Definitely at 40-45x, they still don't make sense. I don't find a reason with a 10-12% kind of growth rate why Indian FMCG companies should be at a premium to global peers, right? Global peers are at somewhere around 25x, and I think that's where these companies should eventually come to. It might be time correction or it might be price correction very soon. That only time will say, but I don't see any major rally in this space going forward.
You know, Varun, we were just looking at the list of top losers in the year gone by, and right on top there is IndusInd Bank with a 40% decline. And I see a lot of these banking and financial names. Bandhan Bank has lost about 32%. There's Equitas, which is down 39%. AU Small, which is down 29%. IDFC First as well has seen a big decline. You think 2025... these banks could make a comeback, and leave HDFC Bank aside because it's already begun its up move and now sitting at an all-time peak?
So there are two things which have happened, right? One, the MFI cycle has gone bad, where we saw that NPAs on the MFI side picked up materially. We heard a lot of things from RBI also, where they were they spoke about the concerns they had on MFI, which happened about 9 months back or 12 months back, and the regulator was absolutely bang on in terms of highlighting the risk at the right time. And then we saw this showing in numbers as the time passed, and we kept seeing quarterly that there was pain which was coming. It's so I completely agree with you that probably sometime in 2025 that they might start reversing, where the cycle starts improving, where the pain part which is showing will start getting done with. But we need to wait and see when that happens. I think another quarter or two is where things should stabilize, where things should normalize. And from there, these could be great bets. I would still advise people to wait it out for another quarter, before which I don't think that one should time it currently. And that would be a great time. Obviously, stocks have given good correction. Just wait it out for one more quarter. For me, Bandhan Bank lies an outlier in this space, because they, for the last 2 years, that stock did not rally also. And they were highlighting concerns since the beginning, and they had slowed down their growth in the initial part, which others didn't. And that's why the pain part has been reflecting much more in others. And performance of Bandhan Bank in the last couple of quarters has been quite healthy that way. So in my view, if anyone has to bottom fish anywhere, it can probably be Bandhan Bank for now. Rest others probably wait for another quarter, and then one can look at it. And these are quality names. It's not that a name like IDFC Bank or an IndusInd Bank is not good quality. They're great quality names. It's just that one has to wait it out for another quarter or so and then look to add on to these names.
Right, quality names as IndusInd Bank as well as IDFC First or Bandhan Bank. That's what Varun is liking. But on the charts, Naresh, no doubt, while Varun did mention that Bandhan Bank, things are looking good fundamentally of late for the bank, but the charts are not reflecting that, because the stock has gone through its rough patch, and it's been going through its rough patch year after we see some sort of a recovery. What's your take now on Bandhan Bank? How is it looking on the charts, Naresh?
So technically, if you look at it, there have been too many false starts. Many a times it looked like a breakout above that 200 mark. We saw it happen on the quarterly results, as plus on the day of the management change, etc. But the stock has drifted lower. Now the case is the stock had made a bottom around this 150 mark back in March 2020, and that is where the stock is available. So it's gone one of the only banks maybe which is at a 0% return from COVID lows. So out here, the risk reward is okay, wherein you keep a stop loss below 150. And if this turns, it could surprise on the way up. We had seen similarly RBL Bank broke those lows back in 2022 at 100 levels and then went up to almost 300. So the risk reward is okay if one is looking at it as a turnaround case.
All right, so that could be a turnaround case. But Kunal, let me come to you, and I want to understand automobile sector. In the automobile sector, two-wheelers versus four-wheelers. Which side of the fence are you on when it comes to the charts? Which chart are you liking the most? Is it from the two-wheeler space or from the four-wheeler space?
So I think as of now, it's just I'll probably look at stock specific. So I think Eicher Motors is something which still looks fairly attractive at this 47,000-48,000 mark. Many of the other, and of course M&M from the four-wheeler pack is something which is still looking very attractive, trading about the 3,000 levels. But then you look at the rest of the pack, and most of the names, like of Tata Motors, this was a very strong performer for 2022, 23 and 24 first half. That stock is now down 30% and more, and the lack of participation and the intense selling pressure is keeping the stock trend on the negative side. You've seen Maruti having many false starts. There was a point when the stock was on the verge of breaking 12,000 plus mark in a very confident manner, but that stock has slipped back again to that sub 11,000 levels. That again indicates the kind of selling pressure the stock has seen over the last few months. Then you have the likes of TVS Motors, Escorts, etc. These stocks have also seen a lot of drubbing for themselves. So I would probably believe that as of now, you try to find stocks which have not participated on the downside, and whenever the market gets back into some sort of a recovery phase, these stocks, they tend to have a slight higher share as compared to many of the other peers. And I think in that basket, I would probably believe Eicher Motors and M&M fit perfectly well.
Quite interesting. Varun, what's your own take about autos? Because, we've seen quite a bit of choppy ride. Two-wheelers then sort of made a comeback. There was that leadership change within the PV segment as well. How do you think 2025 is going to pan out, especially for the PVs, because they are the more battered ones?
Honestly, I'm not too excited about passenger vehicles for sure. They have had a run for good 2.5, 3 years. And these are cyclicals, right? So there's a peak which they created twice in a row. And the earlier part of the year, PVs were doing quite well. And now is a time for the last 3 to 6 months that we're hearing that there has been discounting on the ground. There has been weakness in the numbers which we are seeing every month, which is coming. And it's getting visible that that cycle is turning around for the four-wheelers. So honestly, from the PV side, I would still not be too excited, and we are not too positive on the PVs. We partially were positive on Mahindra and Mahindra, and we still remain because there it's a unique play where tractors are doing very well, and you have their unique proposition of these new EVs which have come, and they're doing very well. So from a PV side, if any name, we would be liking M&M in that space, and rest others we will avoid for now. We are very excited about two-wheelers still. Two-wheelers, we have been highlighting for a while now on your show that they are in a cyclical upturn and things are still going pretty strong for them. I'm surprised with the way stocks have behaved in the last couple of months. Obviously, it's also to do with the kind of flows we are seeing from FII side being negative. But names like Eicher Motor at this price, Hero MotoCorp, I would be very excited about. I don't see any reason for any downsides from here. And Eicher is a very, very strong long-term big call that I'm taking, where I think this stock should do exceptionally well for with a 3 to 5 year view. Pure play on aspirations, on the upgrading part. The portfolio they have is uncomparable when it comes to premiumization, when people upgrading. So the best bet to buy today. Valuations have corrected from what it used to be earlier. It used to be at a premium versus everyone else. Now it is at a discount to TVS, at par more or less with Bajaj Auto. I think Eicher is a very interesting play from it.
Consensus coming in on that particular front, on the technical front as well as fundamental front, that is Eicher Motors for you, looking attractive on the charts, and also fundamentally this one is poised for a good run is what Varun is of the view. The other sector, I'm sure that I'll get a consensus view or a consensus yes from both of our charters as well as from you, Varun, would be the QSR space. But before that, let's talk about Zomato, whose market cap has surpassed that of Tata Motors as well as Bajaj Auto. We at ET Now decided to take a look at what has been aiding the rise and the road ahead for the business. So let me bring on board Ashesha to tell us all about that. Ashesha.
Well, yes, Zomato is clearly in the league of well-established and big players now. Remember, Zomato listed in July 2021, and since then, what a journey it has been. And market cap of Zomato when it listed stood at about 60,000 crores at the upper band of its price limit. And on the day of listing itself, because it listed at a premium, the market cap crossed 1 lakh crore mark. And today, the market cap stands at a whopping 2.8 lakh crores. This is higher than the market cap of several auto companies, the likes of Bajaj Auto and Tata Motors, whose market cap stands at about 2.5 to 2.7 lakh crores. Several other companies whose market cap is above 2 lakh crores includes the likes of Adani Ports, Trent, Coal India, Avenue Supermart, DLF, Nestle and Jio Financial. So Zomato has clearly entered the league of big and well-established profitable companies. Now let's have a look at how a journey of Zomato has been ever since it got listed. Remember, the upper price band was at about 72 rupees per share. It got listed at a significant premium. The stock currently trades at 280-85 odd levels. What a wealth creator the stock has been over the last 3 to 4 odd years. Now let's also understand what is really working well for Zomato. Food delivery business continues to remain very profitable and stable. Management outlook with respect to the coming couple of quarters also continues to remain strong. Blinkit offers generational opportunities, so several positives that are working in favor of Zomato, and the management guidance with respect to outlook is also very positive. They are penciling in 20% CAGR over the next few years. They say quick commerce can achieve about 4 to 5% EBITDA, and as far as the dark store addition target is concerned, that is also very positive. And the latest cherry on the cake is the entry of the stock in sensex. Remember, it was included in FNO in the month of November this year, and now it will be included in sensex with effect from the 23rd of December 2024. So several positives working in favor of the company, and the market cap has also crossed that 2.8 lakh crore mark, much above several other well-established companies.
Leave it at that, Ashesha. Kunal, Zomato, of course, has been one of those stocks which have barely seen any decline, right? But do you think now Swiggy can play catch up? And could 2025 be a bigger gainer for Swiggy as opposed to Zomato?
See, for Zomato, of course, I would be very bullish even from current level, 6th or the 7th consecutive quarter where the stock has done reasonably well. And I think from those 50 rupees or 60 rupees thereabouts, the stock has gone into becoming a multi-bagger. So I think, yes, it's stagnated on the 300 mark, but then that's a natural course of price action because the stock gets back into an overbought territory. So it tends to remain a bit more sideways, slight bit more choppiness than what it was maybe earlier. But then I think the trend and the direction still remains on the upside. For Swiggy, off late, and because the data, the price history is a lot more limited, it's just that off late, because of the strong volume and buzzing around the stock price, the movement from 500 to 600 in a very short span of time, there seems to be a lot more positive price volume activity for Swiggy. So what we can expect is that on the way up, when the stock holds back its strong support levels and keeps on making higher lows, that's where we attribute that the trends are sustainable. So as of now, we'll just look at this as a step-by-step process. As of now, 500 seems to be a very strong and a durable support for Swiggy.
Oh yeah, my bad. Barely any tracking history. But Varun, what is your own sense? Could 2025 be both Swiggy and Zomato do well, or it's going to be an either-or?
See, we don't have coverage on these names, but I'll just like to mention it's quite visible, right? The kind of business they're doing, the way they're delivering. Fabulous businesses, the kind of platform they have built, both Zomato and Swiggy, they're doing exceptionally well. I keep talking about this to my clients and to a lot of people whom I meet, that it's just unbelievable that platforms like Instamart and say Blinkit, etc., they're all delivering stuff to you way before you can go and get your stuff, right? So it's just unbelievable that the way things are panning out. This entire e-com delivery platform space is fabulous. And I think these are multi-year stories. They have changed the way of living. And I don't see any reason why these stocks are going to stop. They will be potential multi-baggers from here as well.
Right, so that's quick commerce for you. Let me take your view on the quick service restaurants as QSR space. Actually, Varun, I by mistake actually labeled these companies as QSR, given the fact that they've kind of like eaten the SSGs for most of these players. So what's your take on the QSR space, given the fact that you have a lot of people sitting at home and ordering in?
See, again, we don't have coverage in this space either, but I'll just like to mention that these are again businesses which are doing exceptionally well. I see a lot of hope here, and as you're rightly mentioning, a lot of people have been ordering from home. The way the living was, say, 15 years back, 20 years back to what it is today, I think these businesses have a lot of ground to gain from it. They're expanding quite well. Their SSGs will start picking up, in my view, going forward, and I see a lot of hope in these businesses. I think these are also great spaces to be in. They haven't done too much in the last 12 months, 24 months. These can be interesting place to be in.
All right, so that's the view coming in on QSR space as well as quick commerce space. But Kunal, before we wind down for trade, let me get your BTST idea for our viewers.
So there'll be a couple of buy trades. So the first one is actually a buy on Sun Pharma. Again, expecting that the stock would probably try and pick up pace from here on and coming out of a mild consolidative range. So would look out for targets in the range of 1860 and stop loss at 1790. And the second could be interesting pick. It's a buy on Indus Star. The stock forming a bullish engulfing pattern today on the daily charts. So would look out for targets in the range of 355, stop loss at 340.
Surprising, Kunal. Yesterday, when we were talking about BTST, you had one buy, one sell call. Hopefully, should we read between the lines, things will look better
Yeah, in fact, today's day has been quite stable because after that initial 250 points gap down for the index, I think we've not given a way out for the Nifty as well as for the Bank Nifty, and the market breadth has improved. So that itself indicates that we should be consolidating for the next couple of days.
All right. So, Naresh, what are your BTST ideas? Both buy calls?
Yeah, so both buys, we've seen good relative strength in the pharma space. That is where a buy on Lupin, which is close to a breakout. Stop loss at 2140, target price of 2200. Second is a buy on Muthoot Finance, continue to remain bullish here. The stock has hit a new all-time high today as well. Stop loss at 2100, target price of 2180.
All right, so those are the picks coming in from both of our experts. In fact, both of them have actually picked stocks from the pharma space. So let me get your view, Varun, on the pharma space. How is it looking fundamentally, given the fact that you have a change of regime also in the United States come next year? That will be at play as well.
Yes, absolutely. So one will have to see how policies will shape going forward once the Trump government takes shape. We'll have to see what their plans are going to be, how their actions are going to be in this space going forward. We were hearing a lot on the Biosecure Act. A lot of things could play out, which is yet to play out, and we are not seeing it. So CDMO space has already done quite well in terms of the stock prices, but no material action has come on that side. So one will have to wait and see. I think the stock price actions are factoring in quite a lot of positives. So one has to be a little careful. The space which probably we will be more excited about in the healthcare space would be the hospitals, which is more of a domestic story. And they're doing exceptionally well. I hear from some of the hospitals that break-even times have reduced to somewhere around 6 to 9 months, which is unbelievable, right? If you do a capex and it's up and running, you break even within 6 to 9 months, and that's where you're seeing a lot of capacities being built up and a lot of hope coming up in terms of how these hospitals could do from here. So we'll be very positive on the hospital side of the healthcare space. Rather, we'll wait it out to see what the policies on the pharma side from the Trump administration happens.
The take coming in on pharmaceuticals, just looking at the text of the market today, though, it doesn't seem like there's any sort of recovery. While Nifty Pharma may have done whatever it has year to date, but it's Bajaj Finance, it's ICICI Bank, which has been a top drag today. Reliance has, drawn down about almost 2%. And then, of course, there's been TCS Infosys as well, which have also seen a fair amount of decline, and they definitely must have contributed a fair bit to today's decline as well. The Tata Motors, L&T, M&M, Axis Bank, these have all been losers in today's trading session. Kunal, what do you think the construct of the Nifty Bank is going to look like? Do you think 2025, both HDFC Bank, ICICI Bank will outperform together, or do you think HDFC Bank could perhaps take the lead?
I think both should outperform together, and I think we're seeing those initial signs being laid out for both of these names as compared to rest of the private sector banking stocks, because we are at a confluence point over the last maybe one and a half odd month where the divergence is getting a lot more exaggerated. We are at that point where HDFC Bank and ICICI Bank are the two heavyweight names which have a lot of impact on the private sector banking names and the Bank Nifty index as such. And then when you try to do a relative strength comparison with rest of the other names, you have so much of divergence coming across from the rest of the private sector banking stocks. You have IndusInd Bank, which is still trading at its 52-week lows. Axis Bank is struggling to hold or just about be in a range around the 200 DMA. Kotak Bank has been stagnant in the 1700 to 1800 band for the last 3 to 4 months. So that itself indicates that it's just two private sector banking names which have shown leadership, and I strongly believe that this leadership should continue for a good part of 2025.
All right, so that's all about HDFC Bank as well as ICICI Bank. Naresh, let me come to you. What's your view coming in on the auto space? We got Kunal's view, the Eicher Motors looks good. What's your take on that one? Because Tata Motors in particular, let me talk actually about Tata Motors in particular, because that one has not had a good run. In fact, a sharp decline over the last 3 months as well.
So a lot of names have corrected sharply, and they would take a much longer period. So Tata Motors has corrected a lot. Closer to 600 maybe would be a buying opportunity in terms of a bottom fishing case, or whenever it turns. For now, it is only Eicher Motors that has shown relative strength, and it had not outperformed in a major way in that 2023 to 2024 move in autos. So that's one more reason Eicher Motor looks interesting.
Okay, let's begin winding up for the day then. Varun, good to have you on the show. Kunal, Naresh, we'll let you guys go as well.